Bitcoin, once again breaking headlines. But the question is, where is it heading now? Rocket just this week, Bitcoin saw a sharp fluctuation, moving between $61,000 and $65,000, and investors are asking the same question. Is this a correction or the start of a new bull run? In today's video, we'll break down the latest Bitcoin price movement, the real reasons behind this volatility, and what experts are predicting for the next few weeks and beyond 2025. Stay with me till the end, because I'll also share 3 powerful indicators that reveal where Bitcoin might be headed next. Welcome back to Fintrix, your trusted source for financial clarity and smart investing insights. If you've been watching the crypto market lately, you've probably seen Bitcoin jumping up and down like a roller coaster. For some, this is exciting. For others, terrifying. But here's the thing, this movement isn't random. In this video, we'll decode why Bitcoin's price is reacting the way it is, what institutional investors are doing right now, and how you can make sense of the data, not the hype. By the end, you'll understand what's really driving this market and how to position yourself smartly, whether you're holding, buying, or just watching. Let's rewind for a moment. Bitcoin was born in 2009, right after the global financial crisis. It started as an idea, digital money, free from banks. Fast forward to today, it's a $1.2 trillion asset held by some of the biggest institutions on Earth, from BlackRock to Tesla. In 2024, Bitcoin crossed the $73,000 mark, its all-time high, before retracing. And now, in 2025, we're seeing stabilization, with prices hovering around $63,000 to $66,000. The global market sentiment has shifted again. The U.S. inflation reports are slightly easing. The Fed's rate cuts are back on the table, and the next Bitcoin halving event in 2028 is already being priced in. Bitcoin isn't just a currency anymore. It's a macroeconomic signal, a reflection of trust, policy, and global liquidity. Why Bitcoin prices are moving today. So what's actually happening behind the scenes? There are 3 key drivers influencing today's price. ETFs like BlackRock's iShares Bitcoin Trust have been buying thousands of BTC weekly. That's billions entering the market. After Bitcoin's recent highs, small investors started taking profits. This creates short-term dips, not crashes. Talks around crypto regulation in the US and EU are scaring some traders, especially regarding stablecoin oversight and exchange licenses. Think of it like a tug of war. Institutions pulling the price up, retail traders pulling it down. The winner? Depends on news cycles and confidence. Who's winning in the Bitcoin game? You might be wondering, if big money is buying, should I follow? Let's look at the whales. Investors holding more than 1,000 BTC. According to on-chain data from Glassnode, whales have increased holdings by 3% in the last 60 days, a strong accumulation signal. Meanwhile, traders on leverage exchanges like Binance and Bybit are facing liquidations due to volatility. Even billionaires like Michael Saylor, MicroStrategy, and Elon Musk continue to double down on Bitcoin's long-term value. The takeaway: smart money isn't panicking. They're accumulating quietly. And that's your cue, not to rush, but to research deeply before the next cycle. Short-term risks and long-term vision. Now let's talk risk. Bitcoin is volatile. No one can deny that. But volatility isn't always bad. It's opportunity wrapped in chaos. Short-term risks include government crackdowns on exchanges, sudden ETF outflows, and whale sell-offs after profit spikes. However, the long-term vision is massive. Countries like El Salvador already treat Bitcoin as legal tender, and more nations, especially in Latin America and Africa, are exploring crypto-based financial infrastructure. It's not about if Bitcoin succeeds. It's about how fast the world catches up. So what's next for Bitcoin in 2025 and beyond? Experts predict Bitcoin could trade between $70,000 to $100,000 by mid-2026 if inflation continues to drop and ETF demand grows. But if regulations tighten too much, or if liquidity dries up, Bitcoin could retest $50,000 levels before another breakout. Warning: the key risk: over-leveraged investors and government pushback. High voltage: the key opportunity. institutional trust, and global adoption. Imagine this. By 2030, if even 1% of global wealth moves into Bitcoin, we could see $500,000 BTC. Sounds crazy? Maybe. But remember, so did $1,000 back in 2013. So here's the bottom line. Bitcoin isn't just an asset. It's a movement, a test of global financial trust. If you're new, don't panic with every dip. If you're experienced, don't chase every pump. Study the data, understand the psychology, and think long-term. Because whether it's $40,000 or $400,000, Bitcoin's true value lies in freedom, transparency, and decentralization. What do you think? Will Bitcoin hit $100,000 in 2025? Drop your thoughts below. And don't forget, like the video, subscribe to Fintrix, and turn on notifications for more market insights every week. Until next time, stay smart, stay strategic, and stay invested.